Welcome to my channel. I'm John Watkins from Phoenix Room Trading, and today I'm going to be giving you the keys to the kingdom. Again, I'm going to show you my #1 future scalping strategy using the only indicator that matters, price action. This may be a lot of info, but I promise if you stay and watch the whole video, you'll gain some solid insight that you can use to increase your success rate. In prior videos, I showed you a strategy based around SMA levels, supply and demand trading, and high-low breaks. Now what is this secret strategy? Well, it's called the candle flip. I've searched the internet, and to my surprise, no one is really talking about the candle flip. Now, I'm not the first one to discover this, but I was trading for over a year without the knowledge of this strategy. You don't know what you don't know until someone tells you. So I'm going to show you how you can utilize this strategy in your futures day trading and increase your success rate. This is based mainly on price action, and you will have to practice it to get a feel for when you should or shouldn't apply this, but I'm going to walk you through what I'm looking for and why. Before I get into this method, please like this video if you find value, and subscribe to my channel, as I'll be rolling out more content soon, and you're not going to want to miss what I have next. Let's look at a visual. The candle flip, appropriately named, is when the candle flips colors from red to green or from green to red. Simple. We are looking at the opening price and placing orders long or short respectively at the opening price of the candle and taking the movement as it flips and follows through. Applying the strategy is where it gets tricky. So let's open up a chart and go over how to read price action. Make sure to stay till the end of the video where I'll be showing some live trading snippets with specific days that have good price action where you can go back and practice on replay as homework. Let's get into it. Alright, so the candle flip is all based around price action. You need to have a relative understanding of candlesticks and what they mean. You have two things to identify. Number one, you have to identify the trend and whether flip ups or downs are working more. Two, you're going to observe price action to see when to enter. So let's just look at this chart right now, and I'm going to focus on this kind of area right here. So you can see this giant red candle, right? Look at the open, it was at 81.25. In this situation, you flip it down, you're getting about a 72-point move, which is over 1400. You're going to take it at the open short and flip it down. How do you do that? When do you do that? You can see this is a bullish day, right? This is a trending up day. So we came up here and tested the highs, and then it came back down, and you can see these wicks, right? Where sellers are in control. This goes up, buyers come up, sellers bring it down, sellers bring it down. So in this situation, if you're taking a risk to reward trade short, you would short the open at 81.25 and bring it down. Now, what happened here? You're looking to the left. This is what I'm talking about when I say observe price action. You get into this area right here. Buyers pushed everything up, right? Buyers pushed everything up, and then we kind of went sideways right here. So there's a battle going on between the buyers and the sellers. What happened here? They pushed price all the way up quick, sellers came down quick. And as soon as we get back into this little zone, now they're fighting again. Now, why would you flip it up here? This hammer came in right here. What does this tell you? Buyers stepping in. You look over to the left, right? Wicks. Buyer stepping in. Wicks. Buyer stepping in. That's what these wicks mean, right? Price came all the way down here, and they brought it back up. Price came all the way down here, they brought it back up quick. So this is a 2-minute chart. After this hammer I see, the next candle I'm looking to flip it up. Why? Because buyers are stepping in. To me, it's for lack of a better term, it's just stupid to try and flip it down when buyers just stepped in. You want to take it with the price action. And this candle opened at 03. The low is 99.75, so it's very quick sometimes, a few seconds. I see this hammer come in, I'm locked in, I'm looking for the long. As soon as the next candle opens, this thing drops a few points, and this could be seconds. As soon as I see it go red, I'm putting my order at the open, and if I'm really confident, I'll just hit buy market and then take it up. And this went from 03 all the way up to 63. I mean, this is 60 points in 5-6 minutes, and that's $1,200 on one lot. So in this situation, you have a giant red engulfing coming down. The next candle, I'm not looking for it to go long. Why? Because sellers are in control right here. The risk to reward is not to go long after a giant red candle when buyers are clearly not there. Now I know when it comes down here, there's going to be a battle, because there's a battle right over here in this area. Alright, so sometimes I might just wait. I might wait for a clearer trade like this hammer. To me, this is clear. You can see this is pushing up right now too, right? You see what happens here. This is selling off.
and this is pushing up. So you can see what happens while I talk about this. So, and even this candle, right? I mean, when you get these giant red candles down, I'm looking to flip it down. This open was 17. It went up to 26. If you were to flip it back down at 17, it would come down, and it ended up closing at 06. That's still a 10-point trade. That's 200. This candle, hammer, what was I just talking about? The open is 16.25, and it's already up to 25. So you can see the open was 16.25, and it's pushed up to 25 was the high. Why am I expecting this to be green? Because the buyers are stepping in, just like they did over here, just like they did over here. So you can see the opening of this candle was 16.25, and it went all the way up to 26. Now it's 29. 10-point trade. That's the flip up. You see these hammers, and it's the same thing for the downside. You're looking for those clues. Not every candle is going to have a perfect clue setup. You're not going to always know, but you're going to get better. You have to practice reading price action and learn to take the ones that make the most sense. You're going to flip it down and flip it up. In this case, this candle, this was a pretty significant red candle. So I'm not looking for the long yet, because the sellers are bringing it down. This next candle opened at 31, it went high of 36. It goes green. You put your short at the 31.50, and as it flips back down from green to red, you take it short. It went all the way down to 10. That's 20 points. Now it stopped. We know there's a demand zone here. We know buyers stepped in right here, and we know buyers stepped in over here. Buyer stepped in again right here, and it's gone all the way up from this point. It's our job as traders to find the best risk to reward setup, to take the most high quality trades that give us the best reward for our risk. We don't want to risk 20 points for a 2-point trade. We don't want to risk $200, $400 to make 40, 50, 60 bucks. We want to risk $100 to make 500. Those are the best setups in my opinion. Now let's look at another example. Right? I got a 30-point stop loss. The open is 83.75. It just opened. I'm going to place my short. Sellers have been bringing this down. We just broke the high and sold off. The SMAs are curling down right here.
Order filled.
I'm in. Now I have a 7-point stop. I'm going to lose on this trade, which is a high quality setup for me, or it's going to hit. It's going to drop like this. So we can go ahead and move the stop. This low is 62. If it breaks that, which it has, it's going to probably continue lower.
Order filled.
There you go. This is not a trade that's going to happen every single time, right? This is obviously an extreme candle, but I'm catching these moves based on the opening and the flips down, right? Even the flip ups, like this candle right here is a pretty big candle. Flip ups. Instead of trying to guess when you're going to get a large move through some arbitrary technical analysis, I just use price action. I'm waiting for the flip to take it down or up based on price action. Flip up on these big candles, and then flipping down. All right, this price was stalling out. We couldn't go any higher, but sellers were in control, and ultimately it dropped. And you can see here, I mean, I made 600, but this is dropping another 20 points from here. That's another 400. There's a lot more left on the table if you were to take a no-take profit. But in order to catch these larger moves, you just wait for the new candle to open on the 2-minute chart, and you flip it down. And that's a situation for a flip down that you might use. You can go practice. This is March 15th, 2022 at 8:54 a.m. Go on replay and take a look.
There you have it. I hope you enjoyed this lesson on the candle flip. At the end of this video, there will be live examples for homework. If you want to learn more and have access to our live trading seminars, you can join our education service, The Phoenix Room, where we post our trades and conduct live trainings for trading stocks, futures, and options. And we do have a free area that you can check out. Link will be in the description below, and I will see you in the next video.
Alright, homework. So, we have support here at the 200. I'm looking for this to not break the low of 66.50. We already broke the high, came down, broke the high, came down, broke the high, came down. So I'm looking for it to kind of continue up here. This green is the high price of the day. Just dropped. If we don't break that low, if this flips down, which is flipping down now, I'm looking to take 82.50 to the upside if we don't break the low. So if we break 66.50, I'm canceling the order. But right now we stopped at 71, so I'm going to leave it in here.
Stop filled.
Now we're in. Now I'm looking for it to go up, and I'm going to look for my 10-point trade, look for it to continue up. All right, we had support. This is still in an uptrend. We're not really getting a doji. This is the big range, so I'm looking for it to flip up. Now I might tag it 2-3 times before it goes. So that's just why you want to give it space. Sometimes I'll get stopped out and then I'll get right back in. It just kind of depends. You have to practice and get a feel for it. But you can see how it's battling right here at the opening price. This is where it's battling, where it's going to decide whether it's going up or down. But based on price action, based on the fact that I didn't break the low, I'm looking to flip it up.
Order filled.
And that's a winning trade. That's a flip up scenario. Now let's go look at a flip down scenario. And for your homework, this is March 16th, 2022 at 6:40 a.m. So you can come and trade this price action to kind of see when to go the flip up or the flip down. And you can see even here, it's continuing up. I try and take no take profits and give it a wider range. Sometimes I just want to get my 10 points. It's up to you, but practice it. Now let's go look at a flip down scenario. At my 10-point take profit, 7-point stop loss bracket. Buyers are pushing up or stalling out. I'm looking for this candle to become a doji. We're on the 2-minute chart. At 7:14 a.m., at 7:16 a.m., I'm going to flip the candle down. This pushed up, we went sideways. I'm looking for this next candle to come down. It's a very trademark move. I'm even going to put a picture up on the screen and show you what it's going to look like. You're waiting for this move to stall out. You're waiting for this candle to become a doji. And then at the flip, you're going to take it short. I'm actually going to sell market. We have 10 seconds. I'm going to do it at about 58, 59 seconds. I'm going to short at right when it gets to the open because it's so quick sometimes I can't move it. Sold market.
Order filled.
I'm in.
Order filled.
See how quick that was? 215 or $200, 10 points. You have to be quick sometimes, but this is the trademark sort of move, this doji, and then you're gonna take the next one short. All right, now if it doesn't break the high here, 83.50, I'm gonna go short again. So the open 74.
Stop filled.
I'm in. I'm not looking for it to not break 83.50, and I can even come up here if I'm feeling okay. I'm gonna put my stop at 84, because if it doesn't break this high at 83.50, sellers are in control, right? So I'm looking for it to flip back down. This is a bit riskier of a trade, but for homework purposes, I want you to kind of see price action, why it's going to be a flip down that works. We already hit one, you're going to take it again. Now you have to be careful because sometimes it's going to keep on going up. So it depends on the day and the price action, right? If it's a really strong green day, you might not want to get in this trade, but you can see green on it. I'm going to go ahead and just put my stop here at break even, all right? Maybe like +5. And then I'm gonna let it do its thing. I just have a 10-point take profit.
Order filled.
And now it comes down. Now you see, take a look at this. We pushed up, we stalled out, and then we flipped down. You can see this little wick right here. The open is 74, the high is 79. It went up 5 points. That's why I use a 7-point stop loss. Ultimately, it came back down, and we're gonna come back test all these SMAs, the 200, the 9, the 15, the VWAP. This is your support. But I'm looking for this move to come up and stall out and then flip back down. That's a classic flip down. So this is March 14th at 7:14 a.m. If you want to come and lead it, you can come watch this and you can practice it. And then when you're trading live or trading on sim during live trading action to practice, when you see this move, try and see if you can nail it. And then you can put that in your arsenal of tools on when to take a flip down. All right, now let's look at a flip up. We have VWAP, right? We already had this VWAP bounce. This is support. The low is 91.25. If this breaks 91.25, I'm not looking for the flip up. If it doesn't break 91.25, I'm gonna look for the flip up. Get my order ready. Now you can see it stopped at 93.75. It didn't break this low. I'm looking for the flip up. My consensus is it's gonna flip up. I got my order ready. I'm ready to lose on this trade because it's a high quality setup, and I'm gonna let it do its thing. So let's see what happens. So there it goes. See how it flips up automatically? Now you can go ahead and put your stop at break even if you want to. I like to cover my trades when I'm up.
Order filled.
It flipped up. Now why did this flip up? Now this is March 15th, 6:46, 6:48 a.m. Came down to VWAP. This was support. We know VWAP is support from prior videos, and I'm taking this flip up. And I made the quick trade, $200 on 10 points. So that's a flip up scalp. Go back and practice these. I've given you flip ups, I've given you flip downs. Go back and trade these days. Figure out why it's doing what it's doing based on price action, and then get on sim, on live when you don't know what's gonna happen, and practice these moves. Look for these setups. Look for that doji I was talking about where we stall out and we flip down. These wicks tell you a story, all right? These wicks tell you that sellers are stepping in. Ultimately what happened, these two candles, these are flip downs. Even this one, it went back up, it came down pretty quick, flipped down. This opened here, went on, it closed down here. These are flip downs. And then what happens as soon as we get to VWAP, we're flipping up. You're flipping up and you're flipping down.
There's days where flip ups are going to work more and flip downs are going to work more based on the price action of that day. But every day, regardless, is going to be able to, you're going to be able to flip up and flip down. You got to switch that bias quick. You can't just be looking to go short because you have some bias, because this is short, and as soon as you hit VWAP, you're going long, all right? And you're just looking for that setup. I don't really care whether it's a bearish or a bullish day. In this situation, I know I'm going to get a reaction at the VWAP and I'm looking to flip it up. And that's a high quality setup for me. And if I get stopped out, that's okay, because I know I'm taking a higher conviction trade. I'm not just placing an order at random and hoping I get filled. I'm taking a trade based on a thesis that I have based on price action. So that's the flip up, that's your homework, go practice it.